welcome to another TraderGuy.com video. This is Chris from the TraderGuy.com, and I'm taking a look at the upcoming November 21st Forex week. I'm going to take a couple pairs into account here and kind of give you my thoughts. Every once in a while I see some interesting things in the charts, and I do like to put out a video. I think it's helpful. Maybe my experienced eyes can help some of the newer traders, so that's the goal of this video. And the pair that I have in front of you that everybody has to talk about right now, just simply because it's where all of the drama is, and people love drama. They call it volatility in the markets, but it's drama is what it is. We have a pair in the Euro USD that is having headline just throw it around, wildly from time to time. And if you think about the euro dollar and all of the negativity around it, you've got Spanish yields spiking, you've got French yields rising. I mean, now we're talking about some of the heavyweights. We're not talking about Greece anymore. The Italian yields are, the only reason they're under 8% is because the ECB keeps stepping in and buying, and on and on. Nothing good can be said about the euro right now, yet it can't break 135 for any significant amount of time. You can see that on the daily chart we got a couple, three, if you're generous with this one, two shooting stars where we tried to break back over the 135. So it does look like it's finally going to give way a little bit. But having said that, if you look at the weekly chart, you can see that there is something going on in the 135 to 130 area that's just extreme support. I prefer, even though we busted the bottom of the hammer that sat right at 135 from the week before, we closed back above 135. I prefer to sell rallies at this point. I think that it's going to be very difficult to sell into this area. And you'll notice, if you pay attention, every time it gets down below 135 for any significant amount of time, an hour or two, all of a sudden there's this rush of buying just out of the blue. There is talk of Asian central banks being involved in this pair, trying to buy euros to diversify from dollars. The Fed absolutely hates the dollar, wants to kill the dollar, so it wouldn't surprise me if they were involved from time to time too. And it just seems like something is going on in this pair at 135. I could be wrong, it could be paranoia, but the fact is it can't close below 135 with any strength, it seems. Now, if it does manage to close down there below on a daily candle and below our shooting stars, then we probably will go back down and try to find the 130 level. But it's going to be a grind. Anybody that thinks that this is going to be a big move down in very short order is probably going to be sorely disappointed. I would prefer to see a bounce and sell, as it is definitely in a downtrend, but we have a lot to chew through down here. So anybody hoping that their euro shorts are going to be hitting 127 by the end of the week, more than likely are going to be somewhat disappointed. Now, looking ahead at some other pairs, for those of you who are watching the Euro Swiss and not understanding that the Swiss National Bank is putting a floor in it at 120, and the euro does bounce, but this pair doesn't do anything. That's another thing that causes me concern in the euro dollar. Perhaps it's an anti-dollar move, because under the parameters of the Swiss National Bank intervening and threatening this pair to push it higher and higher, and if the euro rallies against the dollar, why is it not taking off against this? And the reality is there's no real underlying demand for the euro. It's being artificially propped up. At least that's my theory. Anyways, so looking at the euro Swiss, you can see that it all revolves around 125 now. If we can get above 125, this market is going to check out. And in fact, I have a standing order above 125. Sorry, I said 135. 125 to go long of this market. And when it does get above there, I am going to buy and hold. Because my suspicion is when that finally happens, at that point in time, we will have had some kind of workout for the EU. I don't know that that's coming anytime soon, but it it looks like it's trying to break out. If we get a weekly close above there, I think this pair goes much higher, probably back to 150 before it's all said and done. There will be a lot to chew through. It won't be a straight shot up. The easy pips have been made, quite frankly. But it does look like a nice long-term buy and hold opportunity could possibly be coming our way in the near future. Looking at the Australian dollar, you can see that it just plummeted. But again, much like the euro, it's plummeted down to pretty serious support. I realize that we did poke the parity level and poke through it, and that's pretty impressive. But this hammer here shows just how much support came in to buy the Aussie. We came down, we blew through, and then everybody just piled in and pushed this thing straight back up. Very risk-sensitive currency, so I suspect that the downward pressure will continue. But having said that, it's not going to be a straight shot either. I don't care if we did break last week's pin bar to the bottom. The truth is there's just far too much in this area. This just looks like trouble waiting to happen. Again, can't sell it here. I want to sell rallies if we get one. And the way these pairs have been moving lately, just give it 12 hours, it'll happen. It seems to be the way it is. And looking at the pound, this is the last one I'll do in this video. I am actually short the pound presently. We broke through two hammers sitting right at 160. That is actually a little bit of a double hanging man. It's a very bearish sign, and we could see 155 relatively quick. It's very interesting that we did get a little bit of a pullback, but when you look on the daily chart, it becomes even more interesting from the short side. Notice how the last 2 days have been shooting stars, much like the euro was. However, this one's a little bit different because it broke at this level here, and I'm going to call it 159. I don't know the exact pip. I want to say it's like 158.80 or so. But it fell down, and then it bounced up and formed a shooting star. It has retested the bottom of this consolidation area. That is classic technical analysis of a breakdown, a pullback, and then we should, in theory, get a fall from there. The Bank of England has a meeting later this week, and they are expected to talk about quantitative easing. If they do, that will be very bearish. Now, of course, the market's already starting to try to price it in, but it does look like the pound is going to see lower levels. I do have 153 to 155 as one big support zone, as you can see here recently. So I'm not calling for a meltdown, but I am calling for 300-400 pips on a break of Friday's lows. Like I said, am already shorted from the breakdown to begin with, but it does look very weak, and it does look dollar positive. And in fact, most of these pairs that I'm talking about, they do look dollar positive as I look around the Forex world, but it doesn't look like it's going to be an easy dollar positive week. Much like last week was a dollar negative week setting up, and it was for a minute, and then it fell back down. We have potential for that again, but it to me looks dollar positive, but more of a grind and probably a lot of choppiness to come. I know that's something that most of you are probably sick of, but it looks like the volatility just is not going to relax this coming week. Okay, guys, got any questions? Email me at chris@thetraderguy.com. Come to the free educational bit of the site. It's absolutely free, doesn't cost $1, has tons of videos covering a lot of topics, and I'm always trying to add to it. So let me know what you think, and take care. Thanks.